Hey everyone, welcome back to Corporate Dakota. Today, Osprey Bitcoin Trust just filed its quarterly report and the numbers show a massive shift in its assets. Quick note, this is not financial advice, just my take on public filings for educational purposes. Here is the big story. Osprey Bitcoin Trust saw its assets nearly get cut in half over just 3 months. And it points to some serious market volatility. This filing is from the Osprey Bitcoin Trust, and it is their quarterly report, basically a checkup on how the company is doing financially for the period ending the 31st of March, 2026. It is a pretty standard report, but the numbers inside tell a stark story about their investment in Bitcoin. Now, Osprey Bitcoin Trust, or OBTC as it is often called, is pretty much what it sounds like. It is a trust that holds Bitcoin and its performance is directly tied to how much Bitcoin is worth. Let's dive into the financial statements. What immediately jumps out is the investment in Bitcoin at fair value. On the 31st of March 2026, the trust held Bitcoin worth about $64 million. But just a few months earlier, on the 31st of December 2025, that same investment was worth a whopping $136 million. That is a drop of more than half, or about $72 million in just 3 months. What is also interesting is the number of shares outstanding. At the end of March 2026, there were about 2.9 million shares. But back on the 31st of December 2025, there were almost 4.9 million shares. This means a lot of investors redeemed their shares, likely cashing out as the value of Bitcoin dropped. Looking at the statements of operations, we see the expenses. For the first 3 months of 2026, the trust had expenses of about $108,000, mostly from management fees. This is significantly lower than the $563,000 in expenses they had in the same period in 2025. This lower expense figure is partly because the management fee rate is a percentage of assets, and with fewer assets, the fee is lower. Now, the really wild numbers are in the net realized gain on investment in Bitcoin section. For the first 3 months of 2026, they reported a net realized gain of over $30 million. This might sound good, but it is followed by a net change in unrealized depreciation on investment in Bitcoin of over $52 million. So, while they made some money selling Bitcoin, the overall value of what they still hold has gone down a lot more. The net result from operations for this period was a loss of over $21 million. In simpler terms, their operations for the first quarter of 2026 resulted in a loss of over $21 million. This compares to a loss of about $21.7 million in the same period of 2025. So, while the amounts are similar, the underlying causes are different due to the price swings. The statements of changes in net assets really lays out what is happening. From the 1st of January to the 31st of March 2026, the trust saw its net assets decrease by over $72 million. A huge chunk of that, over $50 million, comes from redemptions where investors cashed out their shares. This is clear from the change in shares issued and outstanding too. They redeemed 1.92 million shares in early 2026. This shows a clear trend of investors pulling their money out as the value of Bitcoin, and thus the trust's assets declined. This section tells us about the trust itself. It is a Delaware statutory trust, and its main thing is holding Bitcoin. The goal is to track the price of Bitcoin minus their costs. Companies like Osprey Funds, LLC, the sponsor, and CSE Delaware Trust Company, the trustee, are involved in running the show. They use something called the CME CF Bitcoin Reference Rate New York variant, or the index, to figure out Bitcoin's price. It is basically an average price from major Bitcoin trading platforms. They were also planning to convert to an exchange, traded product, and got important approvals from the CC in late 2025. Here they detail how they record their finances. A key point is how they value their Bitcoin. They follow accounting rules that say fair value is what you'd get if you sold it in an orderly market. They also mention an interesting correction of an immaterial error in prior periods related to how they calculated gains and the cost of their Bitcoin. They switched from a last in, first out method to a different one. But they say it didn't really change the overall value of the trust. Let's look at las schedule of fair value. On the 31st of March 2026, they had 946.33 Bitcoin. The price per Bitcoin was about $67,831.76, making the total fair value about $64 million. All of this is considered level 1, meaning it is based on readily available market prices. On the 31st of December 2025, they had more Bitcoin, 1,565.49 units, and the price was much higher, around $87,315.53 per Bitcoin, leading to that $136 million valuation. This schedule of investment holdings shows how the Bitcoin amount changed. At the start of 2026, they had over 1,500 Bitcoin. By the end of March, they had sold about 618 Bitcoin for redemptions and some for management fees. This directly led to the drop in their total Bitcoin holdings. This section talks about dealings with connected companies, mainly the sponsor Osprey Funds LLC. Before they started trading on the Nasdaq, the sponsor used to pay some expenses for the trust and get reimbursed. But after the trust converted to an ETF structure, the sponsor now covers most operating costs. The management fees paid to the sponsor were about $108,000 for the first quarter of 2026, paid in US dollars, which is a change from earlier when they paid in Bitcoin. This is where they explain how investors buy and sell shares. They issue and redeem shares in blocks called baskets, which are exchanged for Bitcoin or cash. The value of these baskets is based on Bitcoin's price. Importantly, they mention that shareholders who buy or sell on the market might pay a bit more or a bit less than the actual net asset value per share. The table showing activity in the number and value of shares created and redeemed confirms the big redemptions. In March 2026 alone, they redeemed 700,000 shares worth over $15 million. Throughout the first quarter, a total of 1.92 million shares were redeemed. They say the trust is treated as a grantor trust for tax purposes, meaning the trust itself doesn't pay taxes. Instead, the tax burden falls on the individual shareholders. They also note that the tax rules for digital currencies like Bitcoin are still evolving and can be uncertain, which could impact the value of the shares. This risks and uncertainties section is crucial. It spells out the big dangers of investing in this trust. The biggest risk is the volatility of Bitcoin itself. They warn that Bitcoin is unregulated, highly speculative, and prone to wild price swings. Factors like negative public perception, lack of clear regulations, and security breaches on exchanges can all cause Bitcoin prices to fall, directly hurting the trust's value. They also mention that the trust does not have insurance on its Bitcoin holdings, meaning any loss due to theft or hacking would be a direct hit to investors. They also talk about the custodian, who holds the actual Bitcoin. The Bitcoin is stored in cold storage, which means it is offline to make it more secure. However, this cold storage means that withdrawing Bitcoin can take up to 24 hours, which could impact the price when they need to sell. The financial highlights section gives a quick summary for the period ending the 31st of March 2026. The net asset value per share started at $28.12 and ended at $21.82. That is a pretty significant drop of over 22%. The total return for this period is listed as negative 22.41%. Just to break that down more, the net asset value per share at the beginning of the period was $28.12. By the end of the period, it was $21.82. The expense ratio for the period was 0.49%. This is the annual cost of managing the fund as a percentage of its assets. This expense ratio is much lower than the 1.29% from the same period in 2025, which makes sense because the trust assets were much smaller in 2026. This section covers what happened after the reporting period ended. On May 7, 2026, the fair value of Bitcoin was around $80,080 per Bitcoin. This suggests a recovery from the March lows, but there is still a long way to go from the peak values seen in 2025. In the management's discussion and analysis section, they talk more about the performance. They reiterate that the trust's objective is to track Bitcoin's price, and the sharp decline in Bitcoin's value in the first quarter of 2026 directly caused the trust's assets to fall by over 53%. They also mention the redemptions of over $50 million as a major factor in the decrease in net assets. They provide a chart here showing the price of Bitcoin over time. Let's look at the 3 months ended the 31st of March 2026 row. The average Bitcoin price during this period was about $76,358, with a high of about $97,546 and a low of about $63,891. The period ended with Bitcoin at roughly $67,831. This clearly shows the downward trend. Here they emphasize the extreme volatility of Bitcoin, even calling it bubble-type volatility. They suggest prices might not always reflect real market forces, but rather investor sentiment, technology, regulations, or even manipulation. This is a strong warning to investors about the speculative nature of this asset. Under controls and procedures, they report that their disclosure controls and procedures were ineffective as of the 31st of March 2026. This is due to issues with oversight during a transition of their fund administrator and the transfer of tax data. This resulted in an audit adjustment. While they are working to fix this, it indicates some internal control weaknesses. Finally, the exhibits list certifications from their principal officers confirming the accuracy of the financial information. So, what is the takeaway here? The Osprey Bitcoin Trust experienced a brutal first quarter in 2026, with its Bitcoin holdings losing more than half their value. This led to a massive outflow of investor cash as people cashed out. While the trust's expenses have decreased due to the lower asset base, the core issue remains the extreme volatility of Bitcoin itself. They've had some administrative hiccups and are working to improve internal controls. But the fundamental risk for investors is the unpredictable nature of digital assets. My biggest concern is how this volatility impacts investor confidence and could lead to further redemptions. What I'm actually looking for is a sustained period of stable performance and clear regulatory progress for Bitcoin before considering this a less risky investment. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If you found this breakdown helpful, please like this video and subscribe for more dives into corporate filings. Join our Discord community too. Link in the description.